Hello, my name is Cherie Leeden. I'm the CEO of Gold Bull Resources, a Nevada-focused gold exploration and development company. We have a growth strategy that is aimed at growing our ounces via both exploration success and also additional acquisitions. Our team is all local. I live in Nevada, and we're here to create a developing company.
Hello, Cherie. How are you?
Very well, thank you. How are you?
Fantastic. Well, thanks for coming on the show. You're part of the Inventa Capital guys. We're really keen to sort of see what you are up to. We've liked what we've seen so far. Indeed. We haven't spoken before, and we haven't heard the story before either. So we're going to sort of have a little romp through what you guys are doing there. But first, we better get an introduction to you. So what's your background?
I'm a geologist by background. I've got about 20 years experience. The first 10 years, very much boots on ground. And the second 10 years, I've gone more the corporate route. Right.
But you've been with some pretty big companies. You're with Rio Tinto, right?
Yes, I was with Rio Tinto. That's how I met Craig Parry, our chairman. We go back for 15 to 20 years. The numbers keep growing, and had a great training with Rio Tinto. Rio gave us that ESG spin that we've really adopted in all the companies that we formed subsequent to working for the major.
Fantastic. Like I normally say to people who come from big companies, it's a very different place to operate than when you sort of step down into the junior space. There are problems, they're just different problems, right? Mm-hmm. So how have you found that transition?
I think I was lucky because I started with a mid-tier iron ore prior to working for Rio Tinto, and that really gave me kind of like a well-rounding outlook on the differences between working for a junior that became a mid-tier and was eventually bought out versus a Rio Tinto, and the difference focus, the pros and the cons of both. And I've certainly tried to take the benefits of both and merge that into the junior sector in the projects that I've been involved with.
It's quite a different space, though.
Absolutely, right? Absolutely. Yeah, the focus is very different. And the additional bureaucracy and the paper pushing with the majors, you can't deny that. But when you have a beast that big, there's also a reason for why they do that.
So we spoke to Craig Parry a couple of weeks ago. People will know him from NextGen and ISO Energy and Vizsla, amongst others. Those sort of the flagship projects for sure. He's surrounded himself with a team of people, obviously people he knows and trusts from, I guess Rio Tinto and elsewhere. What has he brought you in to do? What's he tasked you with?
So he's tasked me with a gold roll-up. Project generation is my expertise. And when I say my team, because I've been working with the same group of, geoscientists for quite a while now. And we were doing project generation prior to forming Gold Bull, and with a Nevada focus, matchmaking assets. We'd appraised hundreds of projects, and during a roundup conference, February last year, Craig and I caught up and got talking about some of these projects that were becoming available that we really liked, liked too much to find another home for them, and thought that we could do something in Nevada because there's a real lack of mid-tier companies producing gold in this state. You've got the majors like the Newmonts and the Barricks and the Kinrosses producing hundreds of thousands of ounces. But there's very few producers, if any, producing between 100,000 to 200,000 ounces. And we see that as a niche market. Canada or Australia, you have numerous, too many to list, gold mines that are producing circa 100,000 ounces. Whereas here, it's either mum and dad, small operations, or the majors. So we thought, well, we can roll up a few assets in this state. It's a mining-friendly place. We're all locally based. Because of COVID, we had our wings clipped. So it really forced us to look in our own backyard and found some amazing assets, purchased the first one from Newmont, and decided to get back in the public arena along with the Inventa team, including Craig.
So what's the plan then? So you talk about Sandman there, the project that you got from Newmont, and I think in Mark O'Day, it was in the Mark O'Day company at one point too. It's a good start because it's got some historic component to it there. And you talk about, I know you've been in Nevada for 7 years. You told me just before we start, you've been living there 7 years. So you are boots on the ground, literally. But you obviously know what's around, mm-hmm. right? But how do these building blocks, get built? So you talk about prospect generation, for instance, but that's going to mean different things to different people. So you've got a cornerstone. How do you build on that?
Sure. So we've looked at hundreds of projects, and out of those hundreds, we've got a short list of five assets that we want. We've got the Sandman already in the door, and the other ones we want for a number of reasons. And I can't say they're not all one particular grade. There's a couple of high grade, a couple of very low grade, and they all work for various different reasons. But in that due diligence process, we look at anything from early stage projects, such as our Big Balds project. That's an early, as greenfields as it gets. You whack a few holes there and you've either got a massive new discovery or you've blown a few $100,000, trying. And that's what we're interested in. We're looking for elephants in elephant country. Because we're all from the majors, we realize it takes just as much time and energy to develop a 200,000 ounce project as it does a 10 million ounce project. So we're looking for big projects, and we're going to keep rolling the dice until we get one.
Right. And are you putting together a team of builders, or are we I'm just trying to understand the model, because again, different parts of Craig's business have different models. So what's yours?
So right now we're building ounces. So right now we're not focused on development. However, that will come. And whether I'm the CEO when that comes or not is a different story. But my task is to roll up the gold ounces to build this resource inventory, to get our assets over 1 million ounces of the current assets. If they're not going to get there, it's probably not for Gold Bull. And to acquire the next asset, ideally with already 1 million ounces in the resource base. And those assets do exist, and a number of those are going under the radar. They haven't been doing the rounds for the last 30 years. In most instances, they've been sitting dormant since the early 1990s when the gold price crashed. And they don't work at a low gold price, but at a gold price over $1,500, they look really good.
So how do you go about vetting these things? Because again, we see also retread stories out in the marketplace, and people pumping those things hard. Just going back into conversations I've had with Craig, where he's saying we have a look at them and we cut them real quick if we don't think they've got the legs, right? You look at a lot of stuff, but what's your vetting criteria? What makes Sandman, for instance, so good?
So Sandman, we really like the undercover, sand-covered exploration potential there. We think the previous explorers did a fine job exploring the outcropping geology. However, they did a pretty poor job exploring anywhere where there was sand cover, which is 70% of the license. And you could actually extend that statement to the entire state. I'm just blown away by the lack of exploration undercover in Nevada, and coming from Western Australia, where we've got, we deal with cover everywhere. Kalgoorlie's, full of cover. There's no deposit sticking out of the ground. So for us, it's just, you've got 50 meters of cover, you deal with it. But here you've got 50 meters of cover, you don't drill it. That was the mindset and the mentality in general. They've been blessed with a lot of outcropping gold discoveries, obviously. So we've taken that approach to, at Sandman, there's 500,000 ounces sticking out of the ground. Basically, we have no downside with a market cap of $30 million and 500,000 ounces known. And we're basically valued as an explorer. So what we're going to do is explore between those resources where we've got the sand cover. In many instances, we've got too little resources and then sand cover and no drilling in between that sand cover. So that's where we're focused on drilling right now. And we're not drilling blind. We're relying heavily on geophysics. Our vice president of exploration is a geophysicist, and geophysics is something that's so underutilized in the USA. I don't know why, because it works, a dream. We've done orientation surveys and it's lighting up the gold mineralization where we know we have gold. And now we're extending that geophysics between the deposits to find drill targets. And we're also not adverse to drilling for the sake of geochemistry, another foreign concept over here. But again, coming from Australia, that's just how we explore. So I guess we're using an Australian exploration model in Nevada, led by Aussies.
Feisty talk. You're gonna have to now deliver on that.
Right. My vets and preachers and my American mates.
Yeah. Hey, so how much money did you raise for all of this, and what are you applying it to?
Sure, we raised around 13 million in November last year, 13 million Canadian. The majority of the money went out the door on day one to purchase 100% of the Sandman acquisition. We paid $4 million US for that, and there's also a 1.5 million bond associated with it, because we're allowed to disturb 500 acres. Another plus of the project is the permits that we inherited from Newmont, as top class plan of operation. So that's where the majority bulk of the funds went. And subsequent to that, they've gone in the ground where we've been drilling. We've completed 3,700 meters of RC drilling. We've completed a 3D IP survey over between North Hill and Silica Ridge resources. We've got more geophysics underway, and we've just recommenced a second phase drill program comprising of 5,000 metres of RC drilling. So we were pretty much hit the ground running, and we've got results starting to trickle in from all that work.
Yeah, you've put a few press releases out on that as well, but obviously, and you knew sort of roughly what you were walking into, but has it been delivering, or as far as you're concerned, did you walk into what you expected?
Yes. So we, with our proposed drill programs, 25% of our holes are going to be resource extension holes. It is in our 500,000 ounce resource. There's a number of open areas where we know we can add pretty easy ounces, low risk, medium reward kind of holes. However, 75% of the holes are located where there's never been any drilling, and they're the high risk, high reward holes. That's what I'm most excited about, because I think if there's another sleeper sitting there, it's likely to be where it has not been drilled.
Right. Okay. Right. So you're quite confident about the way you're going about doing this and what you're starting to see and what you're going to be able to come back to the market with, right? So here's the big challenge, right? You are, let's say, $30 million company, as you say. There's lots of you in the US, Nevada, Arizona, even down in California. It's all saying the same thing, right? I think the management teams have maybe don't have the quality that you've got, but they're all saying the same thing. So how are you guys going to stand out? Because you're going to have to get noticed and then kind of shoot past where everyone else is. So until you're 100 million, no one's really paying too much attention. So what's the plan?
Yeah, it's a tough competition there. There are a lot of similar on paper companies. So I'd say what differentiates us is obviously the fact we've got the 500,000 ounces to really limit the downside. Worst comes to worst, we'll start digging that out of the ground and sticking out of the ground. Second point is that we've got an amazing shareholder base. Our major shareholders are backing us for additional acquisitions. We've spoken to our major shareholders that they're there to write $20-30 million checks, and not a lot of juniors can say that. And that's partially due to the fact that we're backed by the Inventa group, Craig, Mike, and the team. And they've got a great track record of success. My team's got a great track record of discovery, and paired up, we think we've got the access to capital and the access to the projects. So we've spent a lot of time, over a year, on a couple of the shortlist projects that we're going for, and we're in the negotiation phase and just working out win-win deal structures. We've got Keith Peck advising us regarding deal structures. Keith was an advisor to Skeena, and obviously Walter Coles and Craig are on our board as well. And Skeena's my role model company, and that what they've achieved is sensational. And they've basically had a similar roll-up strategy using a major's non-core assets, Barrick in that instance. And we've got a very similar strategy here.
You got a similar strategy, but have you got the access?
Yeah, well, we've done a deal with Newmont for the first project, which is, I think, one of their first divestments for a very long time. So I hope so. But
what about the rest? Because you threw away a line there and said, obviously, if we can get after this 500,000 ounce now, right? But the reality of doing that economically, it would be tough, right? So what you need to do is a roll-up exercise. You need to deliver on that, but there's a lot of competition out there. There's also some people who will overpay, which means that to win, you'd have to overpay. So it's a tough kind of environment out there. So are you close to getting the next one over the line?
I'd say the goal is certainly this year. It won't be next week, but this year I think is realistic. We're certainly talking about what that looks like, because our challenge is our market cap. How do we get another 2 million ounce project when we have a $30 million market cap? So we're playing around with cash shares, milestone payments, and just working back and forth with a couple of different companies to see how that works and how that marriage works. Because again, Skeena was a fantastic example of a beautiful marriage where both companies, I think, have done very well out of SK Creek's success. And if we can do a similar deal structure on some of these assets, I think it could be win-win for the divestment partner and also for us taking the project on to add those ounces.
Yeah, it's going to have to be something interesting like that, because I know you've got people willing to write $20-30 million checks, but that 30 million market cap, that doesn't work for anyone, right?
Okay. Exactly.
Okay, so if something may happen later this year, is it a case of because you spotted some targets, not necessarily because you're in advanced discussion, you're hoping something like that would happen quickly?
It's going to come down to a combo of the deal structure, our market cap as well, and the gold market. So we've got the assets, we've got the relationships with these parties, and now it's just working out which of the assets will be the first to come into the fold, because we obviously can't bring in the three or four assets right now. It'll be one asset most likely this year, and then deciding which one of those makes the most sense. And it's not a technical decision based on geology alone. The environmental aspects plays a massive role in our decision making. Biden administration is also got a spotlight on minerals and on critical minerals, and there's going to be positives and negatives that come out of that. But I think in our due diligence criteria, another thing that separates us from the pack of gold explorers is our emphasis on that. And a lot of projects, a lot more than a handful, have met our geological criteria, but most have failed due to the environmental and permitting aspects.
Yes, it's interesting times with the Biden. Some of the statements coming out of there about critical minerals are great, but not necessarily for non-critical minerals. I mean, what's your outlook on gold?
I'm a gold bull, so I'm bullish on gold. I mean, I think with 5% inflation, it just it's defying logic right now, and I'm surprised it's not already at $2,000. So I think inflation and gold, they have to come together at some point. And even at the current price of gold, all the assets that we're looking at make a lot of sense. So I'm a little perplexed why gold is not even stronger than it is currently, but I'm not an economist, I'm a geologist, and right now we are going to build those ounces, and I think it's a safe bet, looking over the next couple of years.
But what do your finance people say when you're talking to those guys? Because inflation, that statement from the Fed about inflation is probably going to be a little bit more than they realized. They're the only ones that didn't realize. And typically, people talk about gold as a safe haven, etc., which is all wonderful stuff. But the gold market seems a little bit wobbly at the moment. It doesn't seem to know where to go. What's it looking for, do you think?
I was speaking to one of my shareholders yesterday, and they attribute that to the central bank playing games. And again, it's a little complex for me to correlate why gold isn't tracking with rising inflation and interest rates at the moment. Like the reaction of gold yesterday, I thought it'd have the opposite reaction. I thought it'd be 100 over rather than 100 under. So it is interesting. And then we've got the cryptos in the mix as well. But again, I'm going to back a currency that's been around for a few thousand years and a few years. And I think most of our shareholder base are on the same page there. They see this as a blip and a buying opportunity. Okay,
so given this is a sort of downloading exercise from you to me, so I could introduce the story. I'm intrigued by anything by the Inventa Group, quite frankly. You've raised 13 million. You spent a bit of money. How much you've got left? What's that going to do for you by the end of this year?
We've got 3 million cash in the bank, and that is going to be deployed for that additional 5,000 meters drilling at Sandman. And we're also going to do a couple of reconnaissance holes at our Big Balls project to test for another bald mountain style target for a geophysical anomaly.
Brilliant. Okay. Stay in touch with us. Let us know how you get on. I'm sort of intrigued because of the quality of the team and the backing, the financial backing, the ability to go and get capital. I'm intrigued to see what you do with this. I'm more intrigued to see what you do with the M&A component. I think there are deals to be done out there. I think there will be a lot more M&A, some stranded projects and companies out there. So thank you very much for today.
Yeah, my pleasure. It was nice to meet you.